What's going on, guys? So I just wanted to make a quick update video for you guys. Obviously, everything I've been saying for the past weeks has happened. Told you guys that the weekly momentum was negative, and when it comes to trend following, the most important metric is the weekly time frame. That was negative, since the beginning of this month. Actually, it started in January. And so here we are, guys. The S&P 500 is now down 5%. As I said, I was expecting a 5 to 10% correction. And yeah, after I called this bounce here that we had to go back to create this double top, I told you guys that this was most likely going to be a good exit for long-term portfolios, that it made no sense to be all in the broad markets anymore in long-term portfolios, and that based on probability, it just made more sense to have 10 to 20% of your long-term portfolios in cash. The momentum obviously continued being negative, and now we are down 5%. So now that we hit my first target, the question is, are we gonna bounce here, or do we have another 5% drop left before we actually bottom? And if you guys remember, I told you guys that I am expecting a V-shaped recovery after this market correction that we're having right now. We're not in the bear market right now at all, not yet. And my thesis, bigger picture, also has not changed. So I still think that 2025 is going to be slightly positive. I could be wrong on that, but I did say that I was expecting a lot of chop this year, and that was going to be an extremely tricky year. Based on seasonality, we should have a correction basically right now, and that's what's going on. We're in March right now. And then eventually, like after March, based on seasonality, we should have a nice push. The fear and greed is now at extreme fear. So we've been in extreme fear now for about a week. So obviously I'm expecting the rally on the other side to be quite violent to the upside and to then basically fade. So that's kind of what I'm expecting. So do be careful. I have started layering in some new bullish positions. I didn't do anything with all the cash that I have for the past month, as I warned you guys to just keep the cash and to just wait, and there was going to be some great opportunity. And right now, what I'm doing personally, my strategy is very simple. I'm layering in by selling cash secured puts right now, right? So right now, when we're at extreme fear, this is when you want to be selling cash secured put. But am I going all in? No, because of two things. One, we still have a negative momentum on the weekly. So this is why right now, next week is going to be pivotal. If next week is very weak and has no sign of bullishness or buying, that would most likely mean that we are going to actually have that 5% correction. So hopefully I answered the question. So for me, next week is going to be extremely important. And if next week closes up, 1 to 2% to the upside, that would most likely suggest that a counter trend rally is going to continue and that we could bottom here after a 5% correction in the broad markets. But if next week is still very weak and is not able to have a nice bounce, that would most likely be a sign of weakness, and most likely we would continue for another 5% sell-off in the broad market, and then we would finally have that bottom and that V-shaped recovery that I'm talking about. So hopefully that makes sense. Before you guys go away and you click away, I just wanted to show you guys the key levels on the weekly for the S&P 500. It's 550 actually, so we'll see. So if we go to that level, it would be about another 4% drop, and that would most likely be the bottom. We'll see. It doesn't mean that we need to go there, but obviously we broke this key level of 593, and then the next key level is 550 for the weekly time frame. I also just wanted to cover Bitcoin right now, and then I'll go back at talking about the broad market. Just wanted to change subject real quick to show you guys the key levels. And then obviously if the market does go lower, then I would also expect risk assets like Bitcoin to follow as well. It's going to be a great buying opportunity, but I would just be cautious right now. The trend following again is still negative also for Bitcoin, which is a very good measure of liquidity in the market. So right now, obviously you can see that Bitcoin is having a little bit of a tumble here. We did bounce on this key layer level right here of a new indicator I just coded with AI. I will be giving it, by the way, for free as well, so stick around the channel, subscribe. And yeah, right now these are the key level. I've already shown this to you guys, nothing changed. 87 right now, again we're below that key level. This is why I'm not liking the look of Bitcoin. And the next key level is about 71,000 and 69,000, in that ballpark. So if the broad market continues rolling down, I am expecting Bitcoin to have a very good bottom here and then a V-shaped recovery as well for risk assets. So it's going to be a very crazy ride. So I just wanted to get that out of the way. Also wanted to show you guys the key levels for Solana. You guys know that when we broke this key level right here, I got out. I sold 3/4 of all my Solana. I also did trim a little bit of my initial capital before, I think in this ballpark right here. You know, I wish that I had these systems before. I would have taken more profits. But, you know, that's kind of why I went back in the kitchen and I'm cooking some really cool indicators right now with AI. And I'll be giving some completely free so we can all make a lot of money in the next coming months. So hopefully I'm able to do that before the bear market. So that's kind of, you know, my time horizon if you're wondering. So yeah, stick around guys. We're going to make a lot of money with these indicators. And right now for me, Solana guys, my target is $113. It's right here. If we do not reclaim these higher key levels right here, which are strong support, and we clearly broke those, we're going to go to the lower one. Worst case scenario, in my humble opinion, that would be like a complete nuke. It would be about, you know, $70-$60. I don't think that's likely though. I think we'll find a bottom here at $130 for a nice V-shaped recovery. Probably we could go back to 200s after. So it's going to be a great trade, but you don't want to marry it anymore. And it's not the type of market where you want to hit home runs. You just want to do hit base. So hopefully that also helps. And then, as I mentioned, I think that the best strategy for this type of market environment is going to be patient and wait for extremes. And every time you have extremes, you just basically do the wheel strategy and you sell cash secured puts to enter your position at extreme fear. And obviously you sell covered calls at extreme greed, or when the momentum on the weekly time frame turns negative, right? So this is why, you know, I've been hedging for this entire month, my entire Bitcoin ETF positions that I still have. So I'm just collecting premium against it, and I have a very good average, obviously, as I was telling you guys to buy since 2023. And hopefully the biggest lesson you learn is the money is made when you're buying in the bear market. So now talking about that, let's switch to Tesla and just look at the key levels as well for Tesla. You can see that, yeah, so we basically hit all my levels that I was mentioning, guys. This is on the weekly. So I'll just go back on the daily. This is for like shorter term, but it's obviously going to be a little bit more precise on shorter periods of time. So if you guys remember, when we broke that blue line, I told you guys the next target was 295. Those lines, obviously, they move a little bit. So at that time, it was 295. We hit that target to the penny. Afterwards, I told you guys that if we broke that level, we would go to 250, 249 in that ballpark. So levels have changed a little bit, but basically that's where we went. And I told you guys to be very careful with Tesla. It's a management problem. And I don't understand why no one that are bullish on Tesla, all these people that are Tesla fanboys, right? No one at the moment is saying what I'm saying, which I find very weird. So maybe I am wrong, but in my humble opinion, this is a management problem with Tesla and Elon Musk. And when you have a company with the CEO going rogue like this, right? This is not a sell-off driven by fundamentals or the amazing technology at Tesla. And that's what's sad about it. And it also has nothing to do with technicals. It's just basically investors losing confidence in Elon Musk and just selling the stock to reduce their size. So for me right now, I'm not adding. I told you guys that I did de-risk when we were here. I had to reduce my size by a lot for risk management. Right now, I'm very comfortable. I do have bigger amount percentage than any other long-term asset, but I've reduced that percentage to a very comfortable level where I'm very comfortable if we break these levels, which I would not be surprised, by the way, if we break these key levels right here. And then the next target is going to be between the low 200s and that blue line, which is basically a weekly support. And you can see that it's extremely strong. And that's at about 185. So in that ballpark. But definitely when we do enter the bear market, I would not be surprised to go to these lower level. It's going to be an amazing buying opportunity. But before that, obviously, most likely we'll have a counter trend rally at one point. But then eventually, I would not be surprised if we go back into these ranges, if I am correct on the bear market, right? So we'll see about that. I've been pretty damn accurate. But yeah, so hopefully that kind of helps and you guys have stayed protected. There's going to be so much money to be made. It's going to be pretty wild. So just as I said, stick around, stay safe, don't take risk right now. It's not worth it. And so this is the reason why, guys, I would be cautious at buying the dip right now. Overall, the broad market is going to have a correction, and when the broad market corrects, everything goes down, guys. All right, so right now, as I said, short term, we'll see what next week gives us. I do think at one point we're close to the bottom. Next week should tell us if we're gonna have another 5% drop or if we are going back to the highs to then fade right back down. Bigger picture, right? Right now, in my humble opinion, looking at the Sharpe ratio, it's not really a good idea to be buying long term right now. And eventually we'll have a correction. You know, dollar cost averaging in the bear is a good idea. But dollar cost averaging, you know, at the top, you know, it tends not to be a good idea. But long term, you can see that if the market just keeps going up, you'll end up making money, right? But if you want to optimize your entries for long-term investments, you know, I would be cautious at the moment. Not financial advice, but just what I'm doing. This is why I am mentally prepared to see Tesla go to these lower lows if we do have a bear market. So a bear market is different. Right now, we're just having a correction in the broad markets. But if we do have a nasty bear market, as I said, it could start, you know, Q3, Q4 of this year. I do know one thing, it will bottom somewhere in 2026. And that right there will be life-changing. So this is why right now I'm coding all of these indicators. So that's pretty much it, guys, right now for this video. And then obviously we're gonna have to see next week if we're able to push higher to maybe start that short-term V-shaped recovery that I keep mentioning. If not, if next week is horrible, most likely we'll have another 5% pullback, as I mentioned, and then we will most likely have that short to medium term bounce and then V-shaped recovery. And I'm expecting risk assets also to rip like crazy once that happens. So that's pretty much it for the short term. Bigger picture, just be careful thinking you're buying the bottom right now, because when you look at bigger picture internals of the broad markets and valuations, we're still extremely high. And in my humble opinion, it's still not yet worth it to participate in long-term dip buying. And also based on the presidential cycle that I keep mentioning, but this video is not about that. So before I leave you guys, I want to show you guys another indicator I will be giving for free as well. It's an amazing tool talking about dollar cost averaging. So this is a DCA Smart indicator, and it's an amazing indicator that you can basically use to see how much money you would have made buying the dip based on what type of investor you are. So right here in the settings, you can basically choose if you're neutral, if you want to be an aggressive investor, or if you want to be a conservative investor. And basically it triggers buy signals for you on specific threshold deviation that you can choose. So you can choose if you want to start dollar cost averaging every time we're at second deviation or a third deviation of that moving average, and then it calculates for you all the buys. Obviously, you're not going to take 322 buys. That's not realistic, but it's just a cool tool to use just to see how much you would have made. And then what's cool about it is that you can basically use this line right here, and you can tell this indicator when you want to start dollar cost averaging. So let's pretend you want to start buying the Tesla stock back in 2021, right? You can see that first and foremost, the indicator did not tell you to buy. So it never, this entire rally, it basically told you to stay away. And right now, if we go back to neutral style, you can see that again, it's flashing buy signals right here. And we're also close to a smart layer right here, which is 250, which I told you guys we were most likely gonna hit. And yeah, so that's kind of how you can kind of use these tools together to buy the dip basically. And I'll be giving these away for free. And yeah, so that's pretty much it, guys. So hopefully you guys have a beautiful day. Stay blessed, and catch you in the next video. God bless you.